Good afternoon, everyone. I was just thinking what a time to come. After Mahesh talking about the processes, then Mr. Dash coming in talking about his longevity being the oldest asset manager, and my friend Sandeep just coming and talking about the markets and all of that. And one common factor between me and Sandeep is I always follow him in the multiple places where we do a talking. After him is always the one that I have to. And I keep thinking, what do I talk differently? Because he covers pretty much what you would want to. So what I try doing today is, let's talk about, Sandeep has spoken about how the markets would look like. Uh, he spoke about various asset classes, how is he seeing them topping out and all of that, which eventually would mean that equity journey from here looks pretty promising. But promising is a way. But what is more important is how are you able to capitalize on that? And for one to capitalize, the most important thing is what are the processes that you follow. So what I'll try and do today is to talk about something which is very unique to us. We as a fund house might be 64,000 crores of assets that we manage. We are pretty new to many of you. We might have a legacy of more than 9.5 years of being in the business of managing assets, but maybe the approaches were a little different. If I talk a little further on it, I think this is the distribution of assets that one can think of. With us, in the listed space, we manage close to 30,000 crores. And if I look at further 30-odd thousand crores, we talk about your Cat 3, which is on an AI platform, PMS, or the mutual fund, pretty much being there. But that's one part of it, the successes that we have been able to build. But what is more important is what has gone behind those successes. If you have got these many assets, how have you got it? So what we do is, I'll talk about a little bit technology part, something which is very, very, proprietary to us, very unique. I'll try and take you guys through the journey of that and probably talk about it. So the most important thing is, we all talk about behavior has a great edge. But is it only the behavior? I don't think so. Besides behavior, one would need to also look at applying technology and how the technology is going to help you do this behavioral maneuvering through them. Information flows, as we all know, is immense. The sources are too many. But what is more critical is how are you able to take a funnel approach through those information and are able to take what is important, which is leading to taking you the decisions. And that's the journey that we will talk about it now. The beauty is, if I talk about the internal or an external sources of information, the information comes in multiple ways, structured and unstructured. If I talk about external sources, we all know we have a preview to a lot of information, being a daily price volumes, index weights, company fundamentals, ESG scores. They are the lovely sources on the external side, the structured way. Internally, your own analyst team, we all know, all of us have it. They have their own ways of creating those structured ways of building the information. Likewise, if I go to the unstructured ones, like a corporate announcement, there is no structure. Everybody comes in their own way of doing it, but they are credible sources. You have press information, bureau comes up with a lot of information for you all. And if I look at internal, our own, which is a little unstructured way, basically you're talking about thesis, notes, company meeting notes, internal discussions, latest thoughts. What are these? Whether I look at internal or external, structured or unstructured, I'm basically talking about building an ecosystem of information. Now that is primary, because once this is in place, then you are able to apply yourself. How do we do? Now this is something which is what we call a database management system. Now look at it. The funnel approach, which is your market data, announcements, they all come into the data lake. Now these are very critical one, because you please need to understand how AI also has a role to play, how technology has a role to play when we talk about the consistency of 9.5 years you know, there is a lot which has gone beyond behavioral aspects. So if I talk about a data lake, which is nothing but composition of all the information that comes in, market data, announcements, these are more of an external sources, but if I go beyond, I'm talking about a lot of internal nodes that we do build, estimates. Now they're all feeding into DBMS, which we call data lake, and they all get fed into it. Your portfolio, your trading activities, all become the sources. Once they reach the data lake, which is a system, then the cleaning part of the job starts beginning. Then you start doing the cleaning part, which is to figure it out what information are relevant, because sources are immense, and it's all the system is doing. How much of those informations are relevant? What are the ones which is left for, more objective analytical? And then the analyzer. So once the cleaning up exercise happens, the system as an analyzer functions and gives you an output which can be in the form of, number one, market activity alerts. That's one way where the output out of analysis or the post analysis goes into. It could be a source of idea generation, because you're getting a lot of inputs. Now analysis has happened. You are getting something which becomes a source of idea generation. It could be a research report in a much more structured format it has gone. And all of this would lead to an extensive decision support. Now what have we done? We found the information. We got the information under data lake. We cleaned those information. We created an analytical tool. The tool as an output gave you 4 aspects, but this needs to reach to the relevant people. Now that reach part is what we do on a real-time alerts. Goes to the investment team, all the fund managers, all the analysts. They would get on a real-time basis all these alerts. Through APIs, a lot of the information gets transformed into Excel, and they reach out to the people where they can do the changes in their own way on the numbers and build a predictability analysis on the way forward. It's all the system doing. You have the daily reports which starts again getting into each of these people, and all of this happens on an interface, what we call wiki. Now wiki as a terminology, we all know, is nothing but an assimilation of all the informations. You run a query, wiki will give it to you. This is our way of calling wiki, which is nothing but all the information getting together, analysis being done, output being out, and that's what the leveraging of the decision making. Now we are moving to the leg 2. So we have done the first 2 legs. Now we are moving to the next one, which is how each of these alerts starts coming out. If you remember the previous one, I did mention about market activity alerts. What are they? They could be unusual movement that you would notice at a stock level on a real-time basis is getting fed. It could be the relative performance, the block deals, insider trades, technical levels, buy or sell, everything on a real-time basis. The guy doesn't have to think of. It's getting fed to him through the teams, and it's getting on his palm. At a corporate activity level, something which is very, very close to our heart, management changes. We look at the management changes very, very seriously. All those activities, earning transcripts, all the announcements, that's another source which starts again getting fed in, and the research and the decision support. So, so these are basically, I'm just trying to tell you, if I look at the larger, broader words, what constitutes in that. Now let's show how the wiki looks. Now this is the way wiki looks. So if you go to the wiki site, it will look just like this. If you can see, there's an analysis part, learnings, and an introspection part. So like in introspection, we will categorize the companies into great buys, and the third category called not even in hell. So we don't want to look at the companies even the worst of not in our dynamics it would ever be part of. So now what you are trying to see now, after I have just shown you the data lake part, is how the interface would look like. So the coverage universe, analysis, financial services, pre-trade checklist, all of these is when you click in, it will take you to the relevant links, and through the link it will take the relevant stocks, and through the stocks it will get you the relevant set of information that you are looking at. Just for you all to know, this wiki is basically getting maintained and managed and co-created by the investment team themselves. There is no vendor who works for wiki. It's a clear-cut mandate that everything that happens during the day, the fund managers or the analysts cannot leave the room till the time they have fed all of it in the wiki. So what happens every day morning? They don't have an access. 45 minutes to an hour, the daily morning call will happen. The decisions were getting, the stocks get discussed, situations, events, all of the discussions will happen. Every discussion will get fed into wiki. They have, the investment team on the Wednesdays, they have their own day, they have zero access to the people outside the world. All of it that gets discussed on that day will get fed into wiki. Now, all of these are basically the sources of information. For example, just to give you a sense, when this pandemic happened, the last day of the pandemic, when I say last day of the pandemic, which was the working day of the pandemic, when unfortunately market hit the lower circuit, the investment team were together. They took some decisions on that day. So if you go to the wiki today, and if you put it on, you will see not only the photo which is there of the people who spoke, but all the decisions which got taken on that day, the stocks that got bought, the rationale for buying those stocks, everything is captured. So today, if I would want to do a post-mortem and figure it out a similar situation, if it occurs any other time, what were the decisions that were taken on real-time basis on the day when event happened, actually I can go back in a wiki and check on it. This is nothing but a simulation of 5 years of everyday work that we have done. We have been maintaining wiki for last 5 years. So that's pretty long a time in terms of building a decent ecosystem of knowing how have you reacted at various point of time, what has been the reasons for you to take a decision, whether it has gone right or wrong is a separate one that also gets discussed, that the wrong call that you have taken, but you have. There I'm just trying to show you some of the ways of we doing it. There's something called a score. So every company gets analyzed on a score. A score closer to 10 is a desirable score. Anything less than, or maybe it's just one of the ways, I wouldn't say 9 is a bad or 10 is a good. But there are times the companies have done very well on a score. As you can see, the very first company, but the upside as per the analyst says, it is going to be minus 15. Now whether the investment team would take a call to buy or not buy is subjective. The factor is, if you would want to buy a company, it will only be the part of portfolio if the scores are closer to 10. Otherwise, it will not be the part of the portfolio. So this is one of the ways how the ideas get discovered. Now there are two scenarios that I'm talking about. This is a very interesting one again to talk about it. One is that, we looked at a company when the pitch was made, it was quoting at 1,500. The current market price is 1,496. When we took this, call for a company, the Nifty at that point of time was 19,700 odd points. It was done on 28th of September. We have a framework called SCDV, and I will talk about it little later in the slides. This company is an S, but if I look at it, our, the upside that we can see in the company close to 30%. So this is one of the ways how the system will tell you that, look, you took a call on a certain day. When you took a call, the Nifty was a certain level. You had a price argument to build. This is where you are. Now this is an upside that is potentially there. Or the other one, which is the downside there. How would you want to now react to that? Now, it could be the function of Nifty themselves had come down or it has moved up because of the prices in the stocks have changed. But all of it, very scientifically, to the last T, it gets depicted and people, and it becomes much easier way of taking a decision making. But it's not that if the system says it is yes, you will have to buy. No. Uh, while all of these factors would help to take a decision making, but the most important thing is before going ahead to execute a trade, the most important thing is the fund managers have a pre-trade checklist where they would go and look at all the parameters and will do yes, no, can't say. So analysts have to really do a tough job of using the technology, using their own sources of information, all the data that he has been able to bring in to convince. But thereafter, the pre-trade checklist is the most important thing. Only when you score high on a pre-trade checklist is when the trade would go further. So so one is a very scientific way of getting the information in, and yet you wouldn't want only technology to take a role, but a lot of other things as well. Now these are visualizations, they are very important. Why? Because they really help you take a call if you go back multiple years and look at it, what is the way the stocks or how the stocks can actually be looked upon. So, so I'm just giving you 4 or 5 examples of, whether it's an EBITDA margin, free cash flows, how the cash flows have been moving up and down. And likewise, we also have multiple visual aspects to talk about the price movement, how the resistance have been seen, where the supports have been noticed, because all of it equally critical in taking the decisions when you are taking for buying or selling a stock. Now the forensic analysis is something again very, very critical to us. Now this is an interesting one. And because, when I also look at it multiple times, I have a debate with internally. For example, cumulative operating cash flow to the EBITDA 96.7, and yet we have kept a 6th decile. So higher the score, the company on a forensic hasn't done well. So 97 on a free cash, operating cash flow, yet we call it a 6th decile and not a 1 or 2 decile. Now these are the things which is where, informations are there, then you would need to deliberate on the information, because a lot of it also is a function of the nature of the company, nature of the industry, and so on and so forth. It may not be very true approaches, and you don't need to look at them as a Bible and follow it, but certainly they are the great sources of information for you to take a much more qualified information, which is what is needed, when you are doing a decision making. So all the investors' presentations which comes in, they are a part of this. What I can't show the live, demonstration, but if you go on Symphony, if you click on this, it will take you to the link. On the link, all those visual parameters that I was showing to you will come into the screen. All your meeting notes will come to the screen. All your, your forensics will come onto the screen. So at one point of a time, just by clicking on one link, you will get to understand about a company in and out. You don't necessarily need to go through multiple screens to get the information. That's where the link will start, getting onto one after another. So that's the way we do it. As I started off saying, management changes are very, very critical to us, whether it's an appointment, resignation, either way. We take it extremely, cautiously, very seriously, and we would really want to put a lot of work and an effort in understanding them. And that's critical to us as a fodder, in terms of taking the decision making in. When we do so these are all, again, investment teams are doing themselves. So, when you do meet a company, it could be in the form of conferences, it could be the part of one-on-one, it could be in office, it could be some other place, whatever the agenda, all of this again gets captured in the wiki. After the meeting, the investment teams have to come, put it in a wiki, and leave it over there for further, information, interpretations, or qualified stuff that you would want to pull out of that. Now, this is something very unique. Well, we know ChatGPT, we know Ask Chat. We also have created something called Ask Wiki. You have got everything with you. You have got so much of it with you actually. But if you still want technology to help you pull out the relevant informations, rather than going through the notes, you simply put a chat, what is the latest growth guidance given by XYZ company. Just put a chat, enter, in 10 seconds is going to give you, the system is going to give you a summary on that company by visiting through all the notes that you have created over the last 5 years, all the internal, external sources of information in a structured or unstructured way, your own forensic analysis, your own visual analysis, all of that, it will go through all of them in 5 to 10 seconds. It's going to give you a small synopsis to say, look, the latest growth guidance given by the so-and-so company is expected, their outperformance against their peer, and they are expected to grow by 25%, so on and so forth. So this is technology. In 5 seconds, you actually have gone through the entire note that you have prepared on a company, or rather all sets of company in last 5 years. So this is what we call an Ask Wiki. Now, through Iris, you get a lot of information, So those are bundled 3 pages, 5 pages, 10 pages. But who really have a time to go through the 10 pages press release that has come in? What it does is, you feed it in, the wiki will work, it's going to make a small synopsis of maybe a half a para on the entire note, and going to give it to you to say, look, this is what the company is trying to say. So all that you have to do is go through that para and figure it out, whether it's making sense or not, whether informations are qualified, helping you take the decisions informed way, fair, go ahead and do it. Now, assuming I have 5 funds, 5 fund 1, 2, 3, 4, 5, we actually do a health check of every fund on various parameters, which we call a classification. Over here, what you could see is just a small synopsis of that. The list is much longer. What it does is it's going to tell you whether you are owning something which is in line with what you should be. It is contravening to your thesis. Should the fund have that much of mid cap, small cap? Should it be more on a secular, more on defensive? It's going to give you complete insight, which helps you know whether you have onboarded excessive risk, whether you are under owning a risk, whether your decisions are in line with how the fund should be managed. All of this technologically, you will be able to figure it out. So that was the technology part. As I said, 2 aspects are very important. One is how the tech helps you, but how your processes are. We call our process as SCDV. It's nothing but if you go back last 45 odd years on a BSE 500 companies, they on an ROE and a PAT have shown you 15% kind of a growth at an average. What we have done is we have put this entire thesis into 4 quadrants, and the extreme right quadrant we call them secular, which are nothing but a set of those companies who have given you an excessive of 15 years of a growth, both on ROE and a PAT. We, as a house, always over-own seculars. This is our core theory or thesis. Opposite to that, we call a value traps, largely, government-owned company where it's very difficult to secure higher ROEs or higher PATs. We call them value traps. So whatever the benchmark weightages for the value traps in a BSE 500 would be, you will find us under-owning value traps in the portfolio. So we over-own seculars, we under-own value trap, and the other 2 aspects, as you can see, is we call them cyclicals and the defensive. One is asset-heavy businesses, the other one asset-light businesses. But the most important thing, if you divide it right through the center, just divide it right through the center and take one half and the other half. What are we doing? We are always over-owning, we are always under-owning. So I'm more growth-oriented. Am I right? Because I'm ROE in excess of 15. Always growth-oriented as a fund house. But because of tactically, I'm
interchanging my position between cyclicals and defensive, I am able to counterbalance all the market scenarios. If the markets are getting value oriented because of my over-owning cyclical and under-owning defensive, I am able to participate in the value part of the rally as well. And likewise, by over-owning defensive over cyclical, I am participating in the large part of the secular growth-oriented rallies. One of the reasons why we have been able to demonstrate a consistent 9.5 years of impeccable performance. And why do we take the what we said? Now this heat map is going to tell you. What did I say? We always over-own secular. We always under-own value trap. Look at the CAGR. Seculars have delivered 13%, value traps have delivered 7. This is why, as a house, we always over-own secular, under-own value trap. And we take a tactical call by shifting our position between defensives and cyclicals. Now, what you can see is, further to that, return is one thing, but another most important thing is, seculars are far and more consistent in the returns. Value trap, the shades of red you will find quite a many. If I take away last 2-3 years where the value traps have done a little bit better, otherwise it's highly inconsistent as well. That again, validates our thesis why we feel having over-owning secular at a cost of value trap is a better strategy. Now this is something that investment team does very oftenly. They go into the learning, they read books, they create their own blogs. But if I talk about all of this, what is more important is how have you been able to deliver performance? Now this is the performance of our CAT3 AI fund, where since inception, if I look at it, the returns are close to 8%. We have delivered close to 24% on a CAT3. This is an equity opportunity fund. This is more like a value-oriented fund, where we look for the businesses which have gone through a rough patch and now looking back, getting back into the business. If I talk about our mutual funds, this is the fund that I mentioned, focused equity, which has got a highest track record. This fund has seen over 9.5 years. And if you look at since inception, it has kind of outsmarted benchmark by almost 250 to 275 pips. Across the tenures, 1, 3, 5, if you could see, a lot of consistency in the performance can be seen. We have recently launched, so for me, it's been 2 years in the business. After me joining in, we launched a quant, we launched, tax saver fund we launched, and sorry, what has happened to this? Okay, I don't know. So we launched, so now as we talk, we have a tax saver fund, we have a quant fund. Recently, we launched the conservative hybrid, very unique fund, which maintains 50% debt and a 50% equity. Focused equity continues to be our flagship, which has recently crossed 5,000 crores of assets. That's a note from our side. Thank you for being a patient listener.